Canadians are on the brink of bankruptcy, but these recent inflation numbers from June bring a little bit of optimism. Is this the light at the end of a very long tunnel? Or is it just a false hope and we should be getting ready for a roller coaster of recession? Hi YouTube, it's Zach, and you might be wondering, Zach, where's the cool office backdrop you had? What is this? I know, my apologies, I'm on vacation, but I really missed you guys, so I wanted to make a video. So you guys, please forgive me for the annoying sun and the aggressive ocean noise. I know it sucks, we're not used to it in Toronto. I really can't wait to come back from vacation, inhale some smog, some gasoline, and work 16 hours to pay my very cozy mortgage. Inflation is back to normal. The June Consumer Price Index is sitting at 2.5% year over year. And if you are to remove the mortgage interest rate cost from this basket, would be at 2%. Does that mean we're going to start seeing some rate cuts?
There is no hint of cuts in that statement. It is far too early to be thinking about interest rate cuts.
Probably not. There are a few things you want to pay attention to in the Stats Canada report on CPI for June, and the language in it kind of mimics what Bank of Canada said when they did their announcement for the interest rate hike. Bank of Canada is now looking at the core CPI. So I don't know what they were looking at for the past year, but it seems like we were looking at two different numbers. Feels like a bait and switch. No one knows what Bank of Canada is looking at this point, and they keep changing the target. This reminds me of a manager one time where I was working, and our target was to increase sales by 5%. And if we did that, I was gonna get a promotion and the team was gonna get a bonus. So when we hit those numbers, we did the performance review. I was very excited. We reported on the numbers, and the manager said, we're actually looking at the core sales numbers. We're looking at specific products, and it seems like sales have actually not gone up by 5%. They hit 4.5%, so we're not going to give you guys bonuses. Anyway, I'm just digressing. Grocery prices continue to go up, which is putting upwards pressure on that CPI number. And if you're someone who purchases groceries, you're gonna see a 9% year over year increase compared to last year. If you have Loblaws stocks, no wonder why this guy keeps getting rich. We don't have competition in Canada. We have pretty much Costco, Walmart. Costco is amazing. We got Walmart, we got Loblaws, Empire Foods, and there's like one more. And those make up 76% of the market share. In the US, for example, Costco has competition. I think it's called Uncle Sam's or Sam's Warehouse, something like that. It's basically another Costco. We only have one Costco in Canada, and we're grateful for that. Thank you, Costco. On to mortgage interest. Mortgage interest cost was up 30% year over year. So why would Bank of Canada continue increasing interest rates if they're the one who are actually increasing the mortgage interest cost? It's basically they're causing inflation. Well, one of their biggest concern is that buyers are going to come back very fast and start buying up real estate. In fact, that's what happened in May and June. And if you want to get an update of the July real estate market, make sure you subscribe to the channel so that you don't miss out on that. Also, if you don't subscribe, there's a huge chance YouTube will not show you my face again, and you'll miss out. Benjamin Tal, the deputy chief economist at CIBC, saying just remove the mortgage cost from the basket of goods when measuring the CPI, so you'll have a better gauge on what's happening and what you call core CPI to minimize the risk of overshooting the correction. Apparently, we have this thing called a baseline effect, where because last year the inflation went up really fast, it is what we're comparing this year's inflation to. And although it's going up still, because it went up so quickly, it makes it look like it's dropping. So the inflation numbers are actually not dropping. And because of this, the slowdown is not real. So there's a big chance in the next couple of months we're gonna start seeing inflation go back up. If you watch the conference the Bank of Canada did when they announced their 25 basis point interest rate hike in July, they said that inflation is very sticky for a few reasons. One, unemployment. The unemployment rate is still low, and Bank of Canada wants unemployment to go up, because if unemployment stays low, businesses will be competing for labor, just like buyers compete for homes, and that would bring prices up, meaning your hourly rate might go up. And because businesses pass those costs down to consumers, it means the products you're going to buy eventually will become more expensive, and that will increase inflation. Keep in mind, unemployment doesn't mean everyone who's not working. It means specifically only people who are applying for jobs. So if you're a college student who is going to school and not looking for a job, you're not considered unemployed, you're just not looking for a job. And if you're retired, you're not unemployed as well. We're basically looking for people who are applying for jobs, and we want more of them to do so. The second thing Bank of Canada mentioned is high savings. During the past 3 years, since Canadians, we didn't have anywhere to go to spend money, we ended up saving the money that the government was printing. And Bank of Canada want to take that money out of your pocket, from your savings account and from circulation, and make it disappear. Of course, with good savings accounts, Canadians have proven to be more resilient, and we did not cancel apparently our Disney Plus subscription as Krista Freeland recommended we do. But don't worry, as time passes, Bank of Canada will take your money. Of course, number 3, we have immigration. We have 500,000 immigrants coming every year for the next, I think, 3-4 years to Canada. I want to know what's in the marketing materials for that. Whoever wrote the copy and made the brochures to convince 500,000 people to come to Canada sounds like they've done a great job. That being said, these 500,000 immigrants coming every year should be helping with the labor market, because they will all be hopefully looking for jobs, which would increase the unemployment rate, leading in a drop in shortage of labor, which would bring costs down for businesses to hire you. Not good for you, but good for companies. The downside to immigration, however, is that these immigrants need to spend money to eat, apparently, so they're becoming consumers, causing inflation. Also, apparently they need shelter. And since in Canada we haven't figured out how to build more homes on a 10 million square foot land, housing prices continue to go up. Of course, there are many politicians with many ideas on how to fix the housing market. For example, Doug Ford will make it very easy for builders to build homes, special builders. And as Bank of Canada is trying to reduce demand on housing by poking holes in your pocket, this guy comes up with a fascinating solution. In Spain, apparently the government is forcing banks to give lower interest rates for mortgages. And in Portugal, they're subsidizing mortgages. Whenever you hear the government say things like we're going to extend amortization, force lower interest rates, subsidize mortgages, or give first-time home buyers a portion of their down payment to help them with their purchase, and they're not saying they're going to build more homes.
Run, Forrest, run!
Thank you for watching. See you in the next video. Bye.